Welcome to our webinar, State of the Art and Prospects of Alternative Finance in the EU. This webinar is held in the frame of the BE-READI Alps project. My name is Julian Lombardo. I am working for the Chamber of Commerce of Bolzano, which is partner of this project. Before we get started, I want to give you an overview of the project. If you need more information about the project, please contact us and we will give you more information. BE-READI Alps is an Interreg project approved within the Alpine Space area and coordinated by the leader partner Veneto Innovazione. There are 14 partners from the Alpine Space area that are involved in this project. Here you can see all the partners that are involved. So what are the main project objectives of BE-READI Alps? First of all, the project wants to contribute to the valorization of this ecosystem by testing initiatives of the companies with a certain degree of innovation to launch a second life project in the field of digital innovation, private finance, and internationalization, and by providing a specific coaching to support the projects. We will also improve services that will offer to the companies. All the services that we will provide are the result of the cooperation and the synergy of all project partners. BE-READI Alps offers the opportunity to find technological, digital, and commercial partners relying of projects, cooperation, and matching of supply and demand. To provide a good quality of our services, we are going to professionalize the network of business support points through transnational cooperation and development of standardized tools. So now let's see who can participate. Certainly, the companies must have a certain degree of innovation and well established. They have been on the market for several years. These companies also want to evolve under the aspects of digital innovation and internationalization. Moreover, they have a project idea and wish to be supported by the local BE-READI points or the network providers. In the project can also take part technical providers. They should be willing to act at transnational level. And finally, we are open for other BE-READI points, for instance, active service points. In this slide, you can see the BE-READI Alps structure, how the BE-READI Alps approach with the companies. We start with the idea of the company, the project idea, and then we will make a checkup of the company in order to assess if the company is ready for the project. If yes, we will support the company with our services and our network providers. And finally, we launch the second life project. If the project is very innovative, the company can become our champion, and we will support and promote the project within the Alpi space and in other external channels. Now it's the moment to introduce our speaker, Mr. Francesco Paretti. He's an expert in finance and business development. He has also a long experience in EU funds and EU financial instruments. Enjoy the webinar, and I give the floor to Mr. Paretti. Francesco, the floor is yours. Thank you very much.
Okay, welcome everybody to this webinar on the state of the art and prospect of alternative finance. I have a few points to make because the universe of alternative finance is in expansion. There are a lot of actors, not a lot of new products. It's a very dynamic market. So we are going to focus today especially on those products and instruments that are offered to SMEs and not other kind of alternative finance that concerns more donation, rewards, so the non-profit area and other kind of activities. Coming to the definition of what really alternative finance is meant by. So alternative finance market, it's represented by alternative instruments that are alternative to bank credit. So when we say alternative, is to traditional means and are all those alternative finance activities that have emerged outside the incumbent banking system and traditional capital markets. However, we must say that sometimes and in practice, in most of the occasions, entrepreneurs and SMEs use these new tools together with traditional means, so the traditional banking channels. They are not at the moment really competing, they are working side by side. What is now pushing the development of alternative finance market? The market is growing mainly because SMEs have a difficulty in accessing finance by the banks because of Basel II, Basel III, so regulation are getting stricter. And this puts a real stress on SMEs on having a dialogue with the bank and having access to finance. The market of alternative finance has also the other side of the coin, which is not the borrower or the user of the instrument, but the investor. So all those institution, people, savers that decide to put their savings into these instruments. So it's an occasion to have a remuneration for investors. And in most legislation in the EU, this kind of investment, since the market is developing, has some incentives of fiscal nature or other nature. But there is an incentive from the system, let's say, so from the member states, to have investors that put fresh money, fresh capital into these instruments. As you can see, access to credit is a problem for more than 30% of SMEs. It depends on the country. We see Greece, Italy, Portugal, Spain, and Ireland on top of the list, but it's difficult in most of the countries for SMEs to reach and to access the bank credit. That's a state of fact. And this graph refers to an European Investment Fund Small Business Outlook of December 2019. So we see that in recent time, the difficulties are still there. What are sorry. What are the enablers? So who is really pushing? What are the technologies, the people, the capital, the organization that are pushing this development? We have to say that fintech is for sure the biggest contributor to the emerging of alternative finance, because fintech are all those technologies that in a way help to disintermediate financial products and build a direct contact between institutional retail investor on one side and SMEs, who are the beneficiary in the end of the capital or loan that they might receive. Around fintech, a whole universe and ecosystem has developed internationally, but also in the EU, and these technologies are expanding and changing very rapidly. The world actually is looking at what is happening in the UK and the EU with regards to the Payment Service Directive number 2 and the open banking. So we are in a way in the European Union leading the regulatory system for alternative finance, and many countries around the world are looking at the European experience. We have also to say that fintech is already part of our life, because also traditional banking and capital markets use already fintech, because they propose what are traditional products, but through electronic means. Fintech, so it's an enabler. It is also for traditional banking, and we see that mainly as the technologies we have when we talk about fintech technologies, the security and privacy, and we know the GDPR, the legislation and all this application when it comes to personal data and security of data, digital platforms that we will look at during this webinar. Payment and payment system, we have payment that like plugins that facilitate money transfer between parties of a transaction by means of electronic and digital mobile devices. And we have technological solutions that interact with companies' payment system and accounting for clearing. So we have a lot. We know what we are talking about, but we will see how this then applies to alternative finance. Then we have the group of insurance and wealth management fintechs, distributed ledger. So this is mainly the application of blockchain technology. So we have transactions that are split in different servers, whereby each of the server detain a part of the transaction, so you cannot modify once the transaction has gone through the workflow. And this is a very high guarantee of security and integrity of data. Distributed ledger were applied first for blockchain, but now all banks, all financial intermediaries, stock exchange are thinking about to adopt blockchain as a security technology for all transactions. And then we have fintech applied to the regulatory methods, so compliance and monitoring, that we will see going through the presentation. As you can see here, the financial ecosystem has 3 layers. One are the users, which are at the bottom here. The users are savers, customers, retail investors, borrowers, and entrepreneurs and SMEs. The middle layer is the layer of financial technology, so of fintech. We have all those sectors that we were discussing about in the previous slide. And finally, we have the operators, so the financial entities that work on the market, interact, and are the traditional banking services, insurance companies, but the new banks, so banks that work permanently online or only online, for example, And there is all these financial technology incumbents and alternative finance providers that are coming up. We don't know how the situation will evolve. There is a possibility that traditional banks will buy out alternative finance providers. They might go in parallel already for some more years until the alternative finance system consolidates. There's a proper regulatory system behind. We don't know. This is an evolving situation. We see that there are already mixed alternative finance providers that have already in their share capital big banks, but this is under development and is evolving. To give you an idea on what's now the volumes of the alternative finance market, we see that in Europe we have reached 7.7 million, and this excludes billions, sorry, and this excludes the UK. So 7.7 billion are transactions that are made through alternative finance providers and reach SMEs and consumer in year 2018. If we go and look at EU plus UK, we see that the number double. That means that the UK as a leading role in alternative finance is no surprise for us to know that it's such a developed market that finance also in the form of alternative finance is very well developed in the UK. The trend is that UK is now having a slowdown in alternative finance, and the rest and European member states are instead growing up now at a higher pace compared to the UK in the last 2 years. So there is a rebalancing in a way of the situation. And now we go and see what happens at global level. We see that China is the bigger player with 300 billion in volumes in year 2018, sorry, while the rest of the world, excluding China, has registered an amount of 89 billion. So China is the primary operator in alternative finance in the world. The rest of the world shares the remaining part of the market, but leading China is for no doubt a champion also in alternative finance. If we go and look at the big pie of the world, we see that the EU has a share in the market that represents 3%. So it's a small share, it's growing. It's growing in Western countries. Taking on a bigger perspective, is still a small market that needs, of course, to grow. Now we're going to see what are the main alternative financial instruments. We will have a real overview. We will go through most of them, focusing on the ones that are more interesting and more developed, also in terms of product range, and see how this market is developing. So the first distinction to make is that we have two types of instruments: the debt instruments, which is lending, so loans; invoice trading, which is something very close to factoring. So it's individual or institutional funders that purchase invoice and they discount it to the SME. The mini bond market, the initial coin offerings, which are the so-called blockchain made and cryptocurrency transaction. We have on the other side, so on the right side of the screen, you see all the equity instruments that are facilitated by and promoted by alternative finance. And this, we're talking about equity crowdfunding, private equity and venture capital, and business angels activity. How debt and equity share the alternative market. We see that the lion's share is taken by debt instruments because they represent 81% of the market compared to 17% represented by equity. This is normal. I mean, it's easier to make a loan transaction, so a debt transaction, compared to an equity transaction, because an equity transaction means an institution or a private person entering the capital of a company. So that means decide to invest directly, not to borrow money, but decide to invest directly, become shareholder, or become a term partner for the company. So it's reasonable that we have this proportion between the debt instruments and the loan and the equity instruments. In this slide, we see how alternative finance, in a way, covers the whole SME stages of development. We start from the seed stage, then the startup stage, the early stage, scale-up stage, and the late stage. We see in yellow all the equity type of instruments, and in blue, sorry, yes, and in blue the more debt type of instruments. So we go from blockchain financing to equity crowdfunding in the early stage, and then we go with a number once the company is developed, so it's already past the early stage and is in a phase of expansion. We have private equity, mini bonds, debt financing, direct lending, finance, leasing and trade finance, and invoice financing as product that alternative finance can offer a company in this stage of development. So the whole range of product for the whole development stage of the company are offered. In this matrix, we see a little bit how the single products that we have discussed are placed and for what purpose they can be used by entrepreneurs. We see that we start with bank loans. The type of finances is a debt for the company. It can be short, medium, or long term. And the investor, so the counterpart, is the bank. When we go to alternative finance instruments, we have a look at mini bonds. They are also a form of debt because it's a security issued by the company. It can be short or medium term. Normally, mini bonds, we will see, they don't go as a duration over the 5 to 7 years horizon. And mostly, the investor in this kind of instruments are professional investors. The market is opening up now in Italy and in the rest of Europe, also to retail investors, but it's mainly at the moment a market for institutional and professional investors. Then we come up to crowdfunding. That is perhaps the most popular form of alternative finance. Here we have both equity and debt type and various financing forms and terms in terms of duration, participation, minimum amount, and many other things. For what concerns equity crowdfunding and crowdfunding at large, we can have retail and professional investors involved. So it's open to all kind of investors. Coming then to invoice trading, the financing type is a factoring. So it's a discount of factor of an invoice that is made in a couple of days. So the time horizon is very short. And the investors are normally professional. So people that are in the business, in the finance business, and can evaluate a number of things about invoice training that we will see in the next slides. Then we have perhaps the most important category in terms of volume, which is the peer-to-peer and direct lending. So it's a form of debt, has a short and medium-term perspective. It can be done by professional and retail investors. So this is a form of lending that substitutes bank lending and is managed outside the banking sector. It means that the loan agreement, occurs between two parties, and neither of the two is a bank or a traditional financial operator. We have then private equity and venture capital. These are entities that participate into the equity of the SMEs in this case. So they participate with the capital contribution. They have a time horizon that goes from 2 to 8 years generally. So they are partner for a period. It means that at a certain point, they will withdraw this equity and disinvest. And this market is mainly in the hands of professional and institutional investors like pension funds, investment funds, money manager. Finally, we have the last category of ICO and token offerings. The financing type is an offering of the tokens, so of cryptocurrencies. The time horizon can vary depending on the project. And this is a market that is exclusively open to retail. There are no professional and institutional investors present in the market of token offerings. Now, we have a look at what is probably the most popular instrument of alternative finance, which is the equity crowdfunding. What is the equity crowdfunding? You see on the right side of the screen, just a few of the companies. There are hundreds platform in the EU and thousands and hundreds of thousands around the world that deal with crowdfunding equity. Crowdfunding equity is a sale of a registered security by early stage firm to investors. So it's a company in startup companies mostly that looks for investors, looks for new capital and open up to the crowd. So to a lot of people or small investors that believe in the project, believe in the company and in the management and decide to help the company growing or going to the market. So who invests in a crowdfunding campaign becomes shareholder of the companies. Why? What it is equity crowdfunding? I just took an example from a platform. It's a Swedish platform, and you see that they describe here what is to be intended for equity crowdfunding. It's a long-term investment in a company that probably is not yet on the market. Means also being part of the journey in the sense that you if you can share experience also with the owners, you are a smaller owner, but you can influence also the policy and the development of the company if you wish to. Then it's a higher risk investment. You invest in a company that is not consolidated, so by definition, investing in crowdfunding means taking a high risk. It's not like investing in a consolidated company on the stock exchange. So you might know by the time you decide to invest that you are taking a risk and you are risking your capital. Going to then the perks means that sometimes you get also rewarded, like you get the first sample of the product, or you are the first user of a software. You might have also other benefits from being shareholder in a equity crowdfunding campaign and company. I show you some examples to show how can be variegated the world of equity crowdfunding. We have here a food, organic food supplements of Jaga in Estonia. They're raising as a minimum 150,000 euro. They already, with 2 days left, tripled the request, so they could raise with this campaign 565,000 euro. So the campaign was very successful. We see in the middle campaign, in the middle of the screen, a campaign for engineering the future of energy. So it's a project in alternative energy. Also here, the campaign is successful. They are still not met the target of 400,000 euro, but they have 25 days left. So they need to raise another 8%, and the campaign will be successfully closed. And then we have an application of IoT for vehicle infrastructure and car-centric services. So you see, equity crowdfunding can cover from retail to software to energy startups and projects. Normally, how it works, you have a minimum limit that you have to reach. If you don't reach the limit, so the minimum amount of capital, normally you return the money to the investor. So it's there are less and less campaigns we take it anyway. So where you do not reach the target and you accept and retain the capital that was provided to you, even if it's not sufficient. So normally, most of the campaign have a target. If the target is not met, the campaign is not successful. Talking about success rate, we can say that 20 to 30% of the campaigns, depend on the country, closes successfully. So not all campaigns go. Here we have Oyo Nova Gym, that's from Kickstarter as a platform, and this one of the most successful campaign of the last years. You see they raised 2 million, so you can have small campaign of 50, 150, 200, 300, but you might find, especially in the UK, much larger equity raised in crowdfunding. Here they were pledging only 27,000 euro and they got 2 million financings with 14,000 backers. Means that 14,474 people invested in the project. But equity crowdfunding is also developing. What is happening now is that there are more and more platforms that specialize on crowdfunding, on specific sector, like One of the emerging sectors is the property and the real estate equity crowdfunding, where companies are just, and platforms are just dedicated to development of properties or management of real estate properties. We have here in the middle of the screen, Brick Owner. This is a property investment platform. They are a platform and they require new capital. So this is an example of how also equity crowdfunding platform, they can do on their own a campaign to finance the platform itself. Same is from the Future Planet Capital, where is a venture capital platform that looks for new capital. So it's a platform that promotes itself in a way. Finally, we have on the right side, Lend Hand, which is the world-leading for-profit crowdfunding platform in the Netherlands that is searching for new capital to invest in so-called impact projects in various parts of the world through its platform. But crowdfunding equity is not only about SMEs, because here is an example from Philips, a new overhead projector. They made two campaigns. In the first one, they raised 5.5 million euro. In the second one, 5.9. So 10 million euros in two campaigns to finance the development of this project, which is a mini overhead projector. So you see, crowdfunding equities now is a world where also big companies start looking at. What is the European Union doing in this equity crowdfunding world? Basically, they come up with a proposal, so-called FinTech Action Plan, and they're working on the regulation on crowdfunding operators, allowing EU cross-border activities, the so-called EU passport. So whenever a platform is established in the European Union, we'll be able to operate in the whole internal market. That means that there will be a common legislation, a common regulation, and a regulatory system by which every crowdfunding platform will be entitled to operate in the single market without any type of restriction. There is already a European Crowdfunding Stakeholders Forum, which is financed by the European Commission. So at present, there is no direct investment in terms of operational programs for crowdfunding and alternative finance, but the European Union is looking at the market and it's trying to set common rules in order for providers to be able to operate across the European Union with the same rules on governance, risk management, supervision, and information and disclosure to project owners and investors. So that's the main activities the European Commission is pushing, and we are very close to have a common regulation across the whole member states. Now we come to the product that is probably the most popular and the one that makes the most volume across the board, which is crowdfunding lending. It's lending, so a plurality of lenders, such as private individuals, savers, or institutional investors that provide capital to a platform. You see here on the right side of the screen, in the middle, the lending platform. This platform manages money on behalf of small savers, so private investors, but also bigger investors. What they do, they actually promote a loan contract. They undersign a loan contract where one part makes available to another an amount with the obligation to the other to reimburse it within a certain period of time. The scheme is very similar and the contract is identical to a loan that an entrepreneur can sign with the bank. The difference is modalities, approach, and timing also, because this peer-to-peer lending, a loan application can be approved in 2 days. So it's a much shorter time because there is a very high disintermediation, because platform use algorithms, because platform can assess a request in a different way from traditional banks. And they have also less restriction compared to Basel and Basel II, so about the requirements, the collateral, and all these kind of elements that are then coming into play when an entrepreneur goes and asks for a credit. The platform, therefore, is active because in this scheme, they do the request, they analyze, they run their algorithms, and they decide whether to fund a private individual that you see at the bottom of the page, or a company, for loans that can have business purpose, real estate purpose, or just being consumer loans if they go to private individuals. So the whole spectrum of loans are covered, and the platform has a key role. The investor just provide money, and then they forget about the money because the platform is managing the money for them. So here you see a screenshot for a leading company, European company in the lending. You see on the left side what they propose. They say fast and simple financing to grow your companies. Check your eligibility. You go online, you put your data, and you immediately know if you are entitled to ask for a loan or not. They go from 30,000 to 5 million. The rates start at 2.5% per annum. No personal guarantee, no insurance. The process is simple and instant eligibility check. So this is the promise for the company that wants to approach alternative finance. On the other side of the screen, so on the right side, you see what is the proposal for the investor. So whether they are private individuals or institutional lender, they can choose SME from across Europe. They get an interest rate up to 9.9%. They can have monthly repayments. They can direct lend to companies starting from 20 euro, and there are no fees for using the services. So this is how the platform attracts investors. This is another way of crowdfunding lending, which is different from the previous model, just because the platform is just a marketplace. The investors here, they interact directly with the borrower, so with the companies, the entrepreneurs that require money. The platform is there to show the project, to present to let the entrepreneur present their project and their company, but then the investors are not trusting on the platform to assess the company, but they decide directly. So on the basis of the risk return, they decide to invest in company A in Italy instead of company C in France, for example. They do their own selection, and this is why it's called P2P, because in the end, the transaction, the platform is also a mean, it is only a mean, so it's a marketplace, but the interaction is then based on the relationship between borrower and lender. Also here, taking a live example from a website, you see how it's all made simple by FinTech. In 2 minutes, you create an account as an investor. Every day you can choose your loans. So you choose the project you want to fund, and diversify your portfolio. And then every month you receive your repayments. So if the company, if the borrower is paying regularly, you will get an interest rate, which is the interest rate on the loan repayment. Also here, just to show you how large is the spectrum, we can see BE-READI. This is a fast food chain created in 2011 by 2 students. They borrowed 388,000 euro. The loan was for opening the first restaurants. They had a loan for 60 months at an interest rate of 6%. This is something different. It's a company in technology. They asked for 1 million euro for stock acquisition, so they had to acquire a stock of material. They are supplier of Samsung, Apple, and LG providers. They received the loan and the interest rate of 5% on 24 months. So this was a short-term loans to allow them to develop their inventory and then be able to operate with the large clients. And now we're going to see what is real estate lending. This is the new specialization that is coming up as one of the main specialization for crowdfunding. Here we have 3 examples. 2 are taken from Estonia and 1 in Germany. These are different amounts because we start from 35,000 and the biggest one is as an amount of 266. These are bridge loan or development loans, so it means that are loans that are provided to the constructing company to finish up normally with the investment. The interest rates are very high just because they are considered high risk. When you see bullet, it means that the loan repayment is going at the end of the period. There are no monthly payment, but the payment will be made in these cases in 12 at the month number 12 or month number 18. So this normally allow the company to then settle the finance in a better, is a bridge solution, and they will then try to refinance with a mortgage, a long-term mortgage with the bank. But real estate lending and real estate equity crowdfunding are really becoming a big specialization together with tech, high tech, and medical, for example, where we see around the world that some of the platform decide to specialize. Here is another screenshot to show you what October is one of the leading company in direct lending, and what we see here is that the European Investment Bank. So we have again a financial institution of the European Union investing into alternative finance. So no direct programs, but financial institutions are in a way backing and providing capital for these new alternative instruments to emerge and consolidate. This is one of the examples. You see that apart from CNP Assurances, BPI France, Groupama, and Eiffel Investment Group, European Investment Bank is one of the institutional investors in the platform. Coming to mini bonds. Mini bonds are very developed in Italy, and this is why we are going to have a short slide about Italy and then an overview on the rest of Europe. But practically they are debt securities issued by listed and unlisted companies. So SMEs, even if they are not listed on the stock exchange, can apply for a mini bond. They are placed on the market and subscribed normally by professional investors. There are some exceptions, but a bond, it's something, and the mini bond especially, it's something that is prevalently acquired by pension funds and professional investors, money manager and professional investors. They can be secure or unsecure, so they could be issued with a guarantee in the back. That means secure. Unsecure means when there is no collateral or guarantee behind the bond issue. Duration is generally 6 years, can vary from very short term, so 2 years to 5, but can go up to 7 or even 10 years. But normally the duration stays between 2 and 5 years. The bond remunerates the investors through periodic coupons. So the coupons is the interest rate that is paid during the lifetime of the bonds. Also here you can have zero coupon bonds, so where all the interest is paid at the end of the year, of the duration of the bond. But normally they pay periodically a yield. It was a very restricted market, also in terms of issuers. So only company listed were allowed to issue bonds. Now the market is growing, and it's also opening up to SMEs. And one of the instruments that is facilitating of the growth of mini bond market are the so-called basket bonds. I took here an example, and you see the symbol of the Pluribond Turismo Veneto, because a lot of companies that owners that were managing beach resorts in the north of Italy decided to put together their requests and issue bonds together in a basket, so that the institutionals and professional investors buying that were not concentrating the risk on a single company, but buying a basket of company with a strategy placed in a determined segment of the market, well known for their activities, and this allowed them to reduce the costs for the issue, because you have an arranger, you need to have a rating for your bonds, so you need a lot of professional working for you to prepare the documentation and go to the market. But internationalization bonds, basket bonds, so bonds that are grouping SMEs, are now a form to sponsor, in a way, the mini bond instrument as an alternative to bank credit for SMEs. Some of these bonds can be backed by public institutions like public financial companies, national promotional banks. They step in the back of the bond and guarantee the first loss of 20, 30, 50%. So in a way, they reduce the risk just to promote the issue and the development of the market. We have many cases in Italy, but also in other countries where these bonds are backed by government or public guarantees. An overview, just to give you an idea what are the interest rates. So we started with an average interest rate of 6% now. In 2019, we see that it's gone down almost 1%. The average maturity is now 4.7 years. The bullet, so the zero coupon bonds are 27%. And you see that while in 2013, 85% of the companies issuing a bond were listed on the stock exchange. Now, less than half of those are issuing bonds. So it means that non-listed companies, ordinary SMEs, now represent 60% of the market. And then we see also the number of companies, the percentage of companies that have a rating, and the percentage of mini bonds that are backed by a guarantee. And in 2019, we had 27% of the companies of the issues of mini bonds that were covered by a guarantee. EU, I go very quickly here, but we see that London Stock Exchange since 2010 has a platform that is called ORP for negotiation of mini bonds. Size goes from £100 to 10,000. There is a market maker that ensures liquidity, and it's really efficient in the UK when the issue goes above £20 million. So you need either to organize the basket funds or be a big company, not a real SME. But here is possible, so in the UK, to subscribe and issue bonds also through online platforms such as CrowdCube. Spain also has a non-regulated market for debt securities for SMEs that is called Mercado Alternativo de Renta Fija, and is managed by Bolsa y Mercados Españoles. So it's managed by the Borsa, the stock exchange of Madrid, and it's open only to institutional investors. So SMEs can issue a mini bond, but buyers are only professional investors, and the minimum size is 100,000. Germany has several marketplaces for SMEs and mini bonds. We have the entry standard in Frankfurt, the Düsseldorf Primer Markt, then in Düsseldorf, then we have Mittelstandsbörse Deutschland in Hanover and Hamburg, and in Munich, M-Access Bond. Finally, in Stuttgart also, there is a Bond DM, that is a segment dedicated especially to mini bonds. It's open to institutional and retail investors, so also private savers can buy them. You don't need to be a fund or a money manager to buy. Also in Germany, it's possible to subscribe via electronic means, and the minimum size of mini bonds is 1,000 euro, so a small size, a relatively small size. Also, France has 3 markets, one of which is Euronext Access, that is also accessible to Belgian and Irish companies. And the markets are Euronext, Euronext Growth, and Euronext Access. They're open to institutional and retail investors. So a retail investor cannot buy online, but they go through banks and brokers. There are now trials ongoing on blockchain and crowdfunding platforms to give the possibility to the retail investor to buy directly, so not going through banks or brokers. The minimum size is very small because it is 100 euro. We come now to invoice trading. Invoice trading is also known as factoring, but it's the sale of a commercial credit. Normally is an invoice in exchange of immediate cash through an online platform. So I'm a company, I have a payment term of 90 days, for example, but I need the money immediately because of liquidity. So I put my invoice in the platform and I have investors ready to buy. They're ready to buy on the basis of a risk evaluation that we'll do on the debtor. So if my debtor is a solid company, of course, they will be ready to buy the invoice and give me liquidity immediately and wait for the 90 days payment on my behalf. It can be with or without recourse, and we'll explain what does it mean. And this ensures faster payment times. So I have an invoice in 90 days, but if I go to a marketplace and go to an invoice trading platform, I can be liquidated my money in 40 hours, 48 hours, 2 days, 3 days maximum. So it's very convenient to me if I need emerge of liquidity to go and ask for a discount of an invoice. We have the marketplace model, the direct purchase model, and the supply chain finance models. The marketplace is where practically there is no intermediation by the platform. The platform is only a marketplace, as it was for market, if you remember, peer-to-peer lending. So the investor decide directly which invoices to discount. So to take and liquidate. While in the direct purchase, the platform is the intermediary who buys directly and discounts the invoice, so the credit in this kind of model. You can also buy a number of invoices and then make a securitization, so make commercial paper and resell it to institutional investor. Another model that is developing is of platform specialized on supply chain finance, meaning they discount invoices towards large corporates that can be energy company, car makers, big corporates that have a number of suppliers. And this platform specialized on receiving this credit assignment, discount the invoice, so pay out the suppliers, and then waiting for the payment times, the payment term from the large corporate, which is the debtor in this case. What are the numbers? Normally, a platform can discount you 80 to 90% of the value of the invoice. For the remaining part, you will have to wait for the payment term to occur, so the 90 days, 30 days, or whatever. It depends on the rating of the debtor. So if I have a good debtor, I'm quite sure that that invoice will be paid. The cost can vary from 2 to 10%. So you pay an high price, but you get immediate liquidity. Sometimes platforms have a minimum amount, so they don't go and discount amount of 5,000 euro, but they start from 10,000 euro, for example. Some of these platforms requires also a minimum turnover of transferor and transferee. So the transferor is the SMEs that wants to get immediate liquidity, and then transferee is the platform normally. We have seen that there is the marketplace and then the direct purchase model, and we go to the next slide where you see some of the operators in the market. And to give you an idea now in numbers, once we have seen all this range of instruments, we can see clearly that apart from the first one on top of the row, which is P2P marketplace consumer lending, when we start thinking about SMEs, the property lending, so real estate lending and business lending, together with invoice trading, are the segment and the products where much of the business is going on. The three together, they make almost for 3 billion in 2018. I suggest you to have a look at the source of this number, which is the Global Alternative Finance Market Benchmarking Study of April 2020, made by University of Cambridge, which has a Center for Alternative Finance. They are producing regular reports, so annual reports normally, but also they have a very updated website where they keep on with the developments in the alternative finance market, not only in Europe and the UK, but in all around the world. So this is for those of you who intends to look deeper into alternative finance, is a real good source. Another good source is alfinator.eu, which is a Horizon project, which is coming to an end. But if you go and you find the slide also where the web link is included, alfinator.eu, it's a European project with many countries involved, and also they provide documentation, tools, and insights on the world of alternative finance. Coming very quickly to the end, with private equity and venture capital, I put them in the end of the presentation because they are more traditional. There are no new instruments. They are part of alternative finance because these are not bank operators, but they are part of the instruments available for SMEs. Private equity is an activity by which a professional investor acquires shares of risk capital in a company that is not listed on a stock exchange. It can happen in two ways, basically by acquiring shares from shareholders, and this is called a buyout, or by underwriting newly issued shares of a target company. So the company needs capital and it can let access to a private equity fund in these two ways. Venture capital is very similar as an activity, but has the difference that it's the target company is normally a startup and is in a high growth sector like high tech, biotech, and all these kind of sectors that are now fastly growing. They invest in early stage, in expansion financing and turnaround financing. That means that these are the three phases of the companies. If a company is in expansion or in turnaround, it will be a private equity investing. If it is an early stage, it will be a venture capital. How does these two instruments work? They go on a term within the company. They become shareholder. They support with the relationship, capital, management skills, knowledge of the market. They help the company growing in 1 or 2 or 3 rounds because they might decide to invest even more once they enter. And they have normally an exit strategy. So they enter and they know that they will stay in the capital 3 to 5 years. And they prepare and they agree on the exit terms with the entrepreneur. So they say, we are coming in with 1 million. In 5 years, we want to exit with 3 million, for example. So venture capital and private equity, they look for high remuneration because they're taking a higher risk. Being equity partner, they are on the bottom of the chain of creditors. So banks will come first, then mezzanine, and then equity partners will have the last shares in case of liquidation of the company or bankruptcy. So they're taking an high risk and they expect high rewards for it. It is a company from Alfinator. Alfinator is the Horizon project I was mentioning. It's far-fetched. They are in Portugal. They raised, as you see, in 5 stages, money from venture capitalists. 4.5 million, then 11 million, 20 million, 66 million, 86 million. So you see, this is very big money going to a company because the company has grown very fast and needed more and more capital. They do practically, they manage an online marketplace for high-end fashion boutiques from around the world. They have now more than 600 employees. They all work in Portugal. And this is the case of a successful case of venture capital development and application. Coming back to the European Union, what's the role of in private equity and venture capital of the Union? Also here we have a new from the 8th of April, Escalar. So what does this press release say? That the Commission has launched Escalar, a new investment approach developed together with the European Investment Fund. So also here we have an intermediary. We saw the European Investment Bank. Here we have the European Investment Fund that support venture capital and growth financing for promising companies, enabling them to scale up in Europe and reinforce Europe's economic and technological sovereignty. They will provide, so the EIF will provide 300 million financing to funds, and this should trigger investment by these funds, these venture capital and private equity funds, that will go up to 1.2 million, 4 times the original investment. So also here we see that there is no program for venture capital. There is not such an instrument, a direct instrument, but there is the participation of a financial institution into specialized funds. So they give funds to platform, they give funds to professional investors, money manager, and the venture capitalists. This is how the European Union and the European Commission sponsors the market. Here is the page, the home page of the EIF, where you see that they have many diversified investment in private equity and venture capital. And from the page, you can have a list. You can download the list of all the private equity and venture capital funds. They receive regular capital and funding from the European Investment Fund. Finally, a very quick overview of ICOs and token offerings, because this is a very unregulated market. It's not accessible to SMEs. We know that it's very popular. We hear much about cryptocurrencies, Bitcoins, but the market is not mature yet to be approached by SMEs, or is still in a very early stage. But an initial coin offerings is an offering where cryptocurrencies are utilized together with the internet-based blockchain. So the blockchain is the marketplace. They work on a platform that is normally Ethereum, or you can create, some ICOs create their own platform. They raise capital for a project, like in equity crowdfunding campaign, but two are the difference. There is no need for an habilitating platform that selects the campaign and discuss with the entrepreneur. It's all unmediated. There is no platform. There is a internet available. And the other difference is that there is no need for a third-party entity processing any kind of payments. Payments happen directly through the blockchain. So I don't have, like it is in equity crowdfunding, direct lending, that I reach the platform, but I cannot send money to the platform. I cannot send money directly, because anyway, this money is going to be cleared through a bank. And what is the difference here is that banks are not involved. They are outside the circuit. Money transfer are not involved. While in all the alternative finance instruments that we have seen, these have still a role in processing the payments and clearing the payments. So ICOs and Bitcoins are totally off the banking market. This implies reduced cost, but also disadvantage, because one of the big problems with the ICOs and Bitcoins is that they do not comply with anti-money laundering procedures and regulation. And this is a market which is not transparent at present. Just to close, I show you the example of Italy to explain what is the regulatory efforts that now the European Union is making for having a equity crowdfunding passport regulation and try to harmonize. You see, I took the example of Italy, where you have equity crowdfunding and peer-to-peers and lending activities, these two activities. And you see that we have national regulation, we have the stock exchange regulator regulations, and then we have Bank of Italy, so central bank regulation. They are all interacting with each other. Is a very complex system of regulations. There is, payment service provider, electronic money issuers, regulation, social lending regulation, investment compact, and a lot of regulation that are interacting with each other. So the world is complex. Regulate this market is complex. The market is evolving faster than regulation. This is also a problem, because regulatory bodies cannot keep up with transformation, which are digital, are driven by fintech, so are very fast by definition. But this is how the market is evolving. there is a simplification ongoing, but what the real development of the market and how much the traditional banking system will let this alternative finance environment ecosystem develop is still to be seen in the next years. So I just would like to thank you for listening to the presentation. We went through most of the relevant instruments for SMEs. I hope you will have the chance to go deeper in what we have seen in a very quick overview. And I thank you for watching us and hope to see you for another web seminar. Thank you very much.
Thank you very much, Mr. Peretti. If you have any questions, please contact us and we will provide you the answers. You will also find the slides and more information about the project on our website or on the official website of BE-READI Alps. You will also receive a follow-up email with the link to view the recorded webinar. On behalf of BE-READI Alps and our speaker, thank you very much for joining and for your interest in the webinar. Goodbye.